Started. Welcome. Thank you for coming to Compass. We work really hard to make this a welcoming spot, a spot that you can come to with your questions, a spot that you can come to share your concerns with us, and for us to walk alongside the path with you on your financial journey, as oftentimes as well as life. And today, my name is Guy Lehman. I am an owner and advisor here at Compass Financial, and I am in charge of the client educational series. And this is one of those series. About once a month for most months of the year, we get together and we talk about a topic. And sometimes I'm the speaker, and sometimes we bring out outside speakers to give a different point of view on things. So thank you for coming. Coming up in this event series is next month's event is Fraud Prevention 2.0 by our advisor and another owner, Justin Van Houten. He did the same thing last year. Was it last year or 2 years ago? Gave the same thing as last year, but there's a lot of updates because this is moving pretty quickly, right? Fraud moves pretty quickly. The fraudsters that want to get you are coming up with new ways to do it. So we are talking about new ways and new protections. Tips and to be proactive at preventing fraud. All right. I also want to introduce our team advisors, Justin Van Houten, Caleb Pearson's running our technology today. Thanks, Caleb. Alan Holstein, Michelle Bjorkren, Steve Connard, who is actually slated to retire at the end of the year. It's exciting. Stephen Tallman, our newest advisor, and administrative staff, Julie Greer, Joanna Waniger, Hannah Wilson, Cheryl Hurst, Nancy Economist. We also will have some new faces showing up at Compass. That's right. We're growing. And that's a great thing. And I'll talk about that a little bit more at the end. Okay. Today, we are talking about niche insurance. And this is a little bit of an experiment for me, trying to push myself. I use artificial intelligence to come up with this slide deck. Now I did a lot of editing on it, but the layout and all that stuff. So bear with us if there's something just a little bit wrong, but we've tried to make it really good. Okay, what is niche insurance? Well, let's start with what standard insurance is. Auto insurance, home insurance, life insurance, right? They handle the most common risks in our life. Niche insurance is some sort of specialized insurance, and I'll show you it falls under about one of 5 or 6 different categories. And today I'm going to cover about over 30 forms of niche insurance. Niche, of course, just insuring a little slice of your life. And we're going to talk about what they are, what it does, and at the end, this is the participation part. I want everybody, don't let me get off a slide without letting me answer, is it worth it? And all I can do is I can give you my opinion about if it's worth it, okay? All right, let's go. Now, first disclaimer. Oh, I'm in charge of this. There we go. Oh, disclaimer. This is general education only. This is not advice. Please consult your insurance agent if you want advice on your specific situation. Or if you, please talk to your advisor. We'll also have an opinion for you in your situation. Okay. First, I'm going to talk a little bit about how to know if you need insurance. Is that right? Not on. Okay. Got it. Boop. Here we go. How to know if you need insurance. So we all have risks in our lives, right? Lots of risks. There's risks of fire in our home, theft, accidents, auto accidents, illnesses, diseases, death, disability, dementia, weather, ID theft. There's all sorts of risk. And the question that you have to ask yourself on each of these risks is, if that happens to me, can I afford the outcome? Can I afford the financial cost that comes when one of these risks hits me? If the answer is yes, you don't need insurance. Pretty simple, right? So let's talk about I was just talking to a client here about physical damage on their auto, right? There's two types of auto coverage. There's auto liability. That's property damage or bodily injury you cause to someone else. That's liability. And there's physical damage to your vehicle, like a deer hit or a hail or an accident, right? And they talked about a car that they've had for 10 years that is now worth less than $5,000. They may not want to pay the premium to insure the physical damage on their vehicle. Because if it gets totaled, they're okay. It doesn't sink them, right? Okay, so that if you can financially sustain that risk, you don't need insurance. However, if the answer is no, and some of these hit all of us, what happens to our primary residence if what happened out in Pasadena, California happens? Now, heaven forbid it would happen here, but I suppose it could. But a whole neighborhood gets wiped out of your house. Can you afford that financial loss? Most people, almost everybody cannot. And even if you could, would you even want to? Okay, if the answer is no, I cannot sustain the financial effect of that risk, then you might consider transferring that risk to a company in the form of an insurance policy. All right? Let's talk a little bit about how insurance works in general. And I talked to you from someone who was in the insurance industry for about a decade earlier in my career. So this is how I understand how insurance works. Insurance companies are holders of money between the collection of premiums and the paying of claims. That's one of the reasons why Warren Buffett loves it. Because what does he get to do with that money while he holds it? He gets to invest it, right? That's how he has made his money. Okay, so insurance companies are simply holders of money. Insurance companies spread risk. Sorry, I'm behind. Insurance companies spread risk over large numbers of people's autos or homes, whatever they're insuring. It's called the law of large numbers. Any one of us, this is a relatively small number of people, right? It's not likely that anybody in here shares a birthday. But as it gets a little bit bigger, the law of large numbers kicks in, and you're almost assuredly sharing a birthday with somebody. Okay, so the more that you can spread the risk over people, autos, or homes, the better it works. They collect small premiums of the many and pay out the large claims of the few. Now, by the way, how many house fires or tornadoes result in a total loss of your home as a percentage? Very, very low. Less than 1%, far less than 1% of all losses on your home are total losses, right? Usually it's a partial loss. So very often they're not a big claim is not a total loss. Okay, so they collect premiums from many, and maybe only one person in this room might have a homeowner's claim. So they pool that money together and they pay out the big claim. Okay, that's insurance. That is how insurance works. I'm going to keep talking about how insurance works. Okay, remember, low premiums equal low premiums equal low risk from the insurance company standpoint, either in frequency or severity. And what I say about this is if an insurance is not very costly, guess what? It's either not likely to happen or very unlikely to happen, or when it does happen, it's not very expensive. Okay? Now, the opposite of this is also true for insurance companies. High premiums equal high risk. Okay? Think about owning a home in Florida right now. Much higher risk of getting a hurricane and sustaining damage than here in the Midwest. So guess what? They're charging more. Okay? insurance companies over time will collect enough premium to pay claims and cover their own costs. And here's why. Because if they don't, what happens? They're out of business, right? The insurance company will not go away, but they will adjust their premiums to reflect the risk that they're taking in their policies. And I'm going to talk a little bit about insurance company finances here in a moment. By the way, down at the bottom here, insurers actually have their own insurance. Did everybody know that? Insurance companies buy their own insurance, and it's called reinsurance. So for instance, they may reinsure their Des Moines Metro book of business and all the houses that they cover in the Des Moines Metro. They may say, hey, we're willing to pay out $100 million if there's a huge hailstorm that goes through. However, if our total cost of claims goes over $100 million, we actually have insurance for that. And this other company will pay the extra. Okay, so that's how insurance companies kind of handle their own risk. All right. Generally, this is still how insurance works. For every $1 that comes into an insurance company in the form of premiums, 10 cents of that dollar goes to sales and distribution, right? They need to pay agents to sell the policies. 35 cents generally goes for overhead. That's their employees, that's their claims reps, that's their home office, administration, buildings, cars, all the stuff that goes into running a business. And 55 cents generally paid out in claims. Okay, so they reserve about 55 cents of every dollar to pay claims. Now, what happens if they pay out less than 55 cents in that year? Well, they add to the bank, right? It's called a surplus in insurance lines. Okay? If they pay out more than 55 cents, what happens? Well, they actually have to go to their bank and take some money out to pay the claims, and that's a loss. So their surplus goes down. And their surplus is, right, it's their bank account. Do we have some extra? In bad years, we have to pay, but now we need a couple good years to fill the bank back up. That's generally how insurance works. All right. Here is the Compass spoiler. And you're going to hear this a lot as we go through here. A good cash cushion will take the place of a lot of these niche insurances I'm talking about. Now, what's a good cash cushion? We hear that a lot. You know, the standard advice is 3 to 6 months of your spending in a bank. Okay? And that's not just because you may, if you're still actively working, you may lose your job, right? That's part of the reason we have an emergency fund. But the other reason we have emergency funds is for all of this stuff that we're talking about, these other risks that pop up that you may or may not have coverage for, okay? So, spoiler, this is going to come up a lot. I'm going to say this a lot as we go through here. Okay, all the niche insurances I basically broke out in, there's 7 different categories here. There's homeowners, there's auto, there's general consumer insurance, there's things kind of health insurance, there's life insurance, business insurance, and a few miscellaneous categories. So let's go through these one at a time. Okay, these first ones are all kind of have to do with homeowners insurance. Okay, sewer backup coverage. Here is the general rule. By the way, this is one of the most common claims in homeowners policies, sewer backup coverage, and it's generally not automatically added to homeowners policies. You typically have to request it. So this is something to think about. Typically the saying is water from below, not covered, right? If water is coming from below your house, up through the drains or up through your sump pump, not covered. If water is coming from above, and what I mean like as if a toilet leaks and drips down through the floors, that is covered. Another thing and not covered, okay, so yes, sewer backup. So this is often goes with heavy rain too, right? Because what causes sewers to back up is the storm system being inundated with water causes, if you're below that grade, water to come up in your basement through the sump or through the actual sewer itself. Okay, so this is a big one. Fairly inexpensive, $200 to $300 a year usually, and typical limits anywhere from $5,000 to $25,000. You kind of get to pick. Okay, is it worth it? Yes, you should have this coverage on your homeowner's policy. I would request it if I were you. Okay, next one, very similar. Whoops, flood insurance. By the way, flood is typically excluded on all homeowners policies. And flood, similar to war and terrorism, those are three big general exclusions on homeowners policies. Why? Because the companies can't underwrite it. They don't know where a flood's going to hit, and a flood can hit a lot of homes at once, so they exclude it. Now, there is a special program called the NFIP, the National Flood Insurance Program, and that's through the government. So guess what? It's very expensive. We actually, when we were looking for a house, it was in a flood zone. We got a quote for $250,000 of coverage on this house. It was over $10,000 a year. We said, sorry, we can't do that. Now, flood is surface water. Okay, water on the surface of the ground that gets in your house. Now, this flood exclusion caused lots of problems in Hurricane Katrina, if you recall that. Why? Because these houses were flooded. There was flooding over the dike system down in New Orleans, and it flooded houses. And insurers came in and said, nope, flood excluded, surface water. And people were saying, actually, that was not flooding, it was wind-driven water. Okay, so there was a lot of lawsuits, and insurance companies ended up excluding wind-driven water too. Okay, so that was the result of that whole thing. No, they didn't get paid because flood or wind-driven water. Okay, so flood insurance, is it worth it? You'd have to have a very specific situation, I think, for it to be worth it. Okay. Earthquake insurance. It really depends where you are. Where we are right here, actually, where does it say? We're in the New Madrid seismic area. We're a long ways, actually, from the New Madrid. It's in southern Illinois and Missouri, I believe. And back in the 1800s, there was a big earthquake there that caused the Mississippi River to run backwards for 4 days. So there is potential in the Midwest, but earthquake insurance is actually pretty cheap here. And is it worth it? Gosh, I don't know. The likelihood of us having an earthquake in Iowa that actually does any damage, I think they say essentially it's very, 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 very low. So I would say probably not. Now, here's the thing is, homeowners insurance does not cover earth movement in general. Not only does it not cover an earthquake, but it doesn't cover erosion, and it doesn't cover settling. It doesn't cover sinkholes. Okay, those are things that are all not covered under your homeowner's policy. So earthquake insurance, I don't think covers those things either. There would have to actually be an earthquake to get coverage. Okay, so worth it? Probably not. Going the wrong way. Ooh. All right. This is an interesting one, and this hits really close to home for me because about 3 years ago, I had a daughter that ran around a blind corner in our neighborhood, and the corner was blind because of a hedge, a plant, and jumped out onto the sidewalk. And it was during a very busy school was letting out on our street. And so the street was very busy, and it had pushed an e-biker onto the sidewalk. And that e-biker was flying up the hill, and my daughter jumped right out in front of him. And I mean, he hit her, and she flew and landed on her head on concrete. And it was an emergency room visit, and it was a very scary time. But guess what? If you're riding a bicycle, your homeowner's liability will cover you wherever you are. And if you cause an accident, that's covered. E-bikes, who knows? In fact, Iowa right now divides e-bikes into 3 classes: class 1, class 2, and class 3. And you can see pedal assist only, stops at 20 miles an hour. Class 2 is throttle assist, stops at 20 miles an hour. Class 3 is pedal assist, motor stops at 28. So I think right now, class 1 and class 2 are still bicycles in this. Class 3, you will need your own e-bike insurance. It's a separate policy, just like UTVs, right? People hop into UTVs and run them around, not covered under your homeowners, not covered under your autos. You hop on a golf course, or a golf cart, you're running around. These are motorized vehicles that need their own insurance. Is it worth it? Boy, I think so. Liability insurance is a big deal. And there are more and more people getting hurt on some of these things. I mean, have you seen them zipping around? And they are big, heavy bikes, aren't they? Okay, so big deal. Yep. Question. Same thing. I would say motorized scooters are probably covered under your homeowners, but only up to a certain power. And I mean, I'm sure they have this information out there. But if you are riding around on a motorized anything, I would be checking with your insurance agent. Okay. Next, collectibles and fine art insurance. This includes like gold in the house, gold coins. This includes jewelry, includes musical instruments, right? Anything that can be potentially valuable of your personal property. And typically your homeowner's insurance offers very small sublimits, right? So your personal property limit might be $300,000 that covers everything, but they say, but we'll only offer $1,000 of coverage for jewelry, or $1,000 of coverage for gold that you have in the house, or $1,000 for musical instruments and other valuable property. If you have something very valuable, and I'm thinking of my brother that likes to own some vintage rock and roll electric guitars, he probably needs to have those insured somewhere else, okay, through an endorsement of your homeowner's policy. So is it worth it? Depending on what you have, that could definitely be worth it. Title insurance. Remember, I'm kind of under the homeowner, the home and the homeowner policy still here. Title insurance, when you purchase a property, does everybody remember paying title insurance? Here's the dirty little secret. The dirty secret is the policy that you bought, who does it protect? It protects the mortgage company. It doesn't actually protect you. You have to buy a second policy that actually protects you. And what does it protect you against? A lot of chicanery, right? Title defects, hidden liens, encumbrances, competing ownership claims that predate. So all sorts of kind of funny things that happen. Again, very occasionally happen, but when they do, and you don't actually have clear title to the house, big problem. Okay, so is it worth it? Yes, but get the personal policy that actually protects you. Now you're still going to have to buy the company, the policy, but spend the extra $150 to get a personal one too. Question? Ooh, I cannot answer that question. The question was, if you have an abstract and have that reviewed by an attorney, there's no need for title insurance. Sorry, Mike, I'm not smart enough. I don't know that answer. Okay, ask your attorney or ask the person that's helping you close on whatever real estate. Next, home warranty plans. This isn't technically insurance, but it kind of fits into the niche area. Lots of limits and exclusions. Has anybody ever had one and actually had it pay for something? Well, my experience is the people that do have it have a hard time getting money out of it. So what I'd say, is it worth it? Probably not. This is a great reason for a cash cushion. Cash cushion should be covering all of these things. Okay. So is it worth it? No, generally. All right. We have gone through kind of all the homeowner stuff. Let's get into the auto stuff. First one, rental car insurance. You guys love the pressure at the rental car desk to sign the damage waiver? Okay. What I would say, hold on here. What I would say is generally, if you have comprehensive auto coverage yourself, it covers liability and property damage for any rental vehicle you're driving. Okay. I've checked on this several times over the years. And again, I've called my agent and said, hey, do I have property damage and liability if I rent a car? The answer is yes. So whatever car I'm renting has the same coverage as my own car that I'm driving. Okay. So if I were you, is it worth it? Yes, but it should be included in your auto. So you don't need to pay the rental company anything for liability and physical damage if you have your own and it's comprehensive, right? That's right. So they're going to charge you, yeah, it's a rental company. If they can't rent it for 6 weeks, they're going to charge you that too. Yep. And that's typically part of it, but definitely check on that. Okay, next one, gap insurance. And this is for somebody who drives off the lot with a brand new car and insures it. And you know what happens to the vehicle price or value once you drive it out the lot? You lose about 20% of your value, right? If you get hit a week later and the insurance company comes and says, you know, well, your car's worth 20% less, we're going to give you 20% less. And this gap insurance is said, nope, we're going to make you whole so you can go buy a true replacement. That's the gap that they're talking about. Okay. So that is included in many auto policies, but not all of them. So you need to check if you're out buying and insuring new cars that you actually have gap insurance. Question? Yep. Sometimes if you're borrowing to buy a new vehicle, the lender is going to require gap insurance. Okay. Auto extended warranties. Oh, this is a juicy one. How many have received an offer yet today on your cell phone for an extended warranty on your 8-year-old vehicle? Okay. What I would say on this is generally the dealer can offer some pretty good extended warranties and may very well be worth it depending on how you use your vehicles. Okay. The third parties that you're getting texted and called on again and again, and even for cars that you don't own anymore, throw them out. Not worth it at all. Okay. Just ignore it. It's spam, basically. So auto extended warranties, depending on how you use, is it worth it? It might be. So check it out and always ask for more. You can't go, what's the worst they're going to tell you? No? Ask for, free tires or free oil changes or whatever you can when you're negotiating to buy new vehicles. So auto extended warranties, worth it? Maybe. Okay, this one is also a really interesting one, and I like to bring this up a lot. This is the one thing that I really hope you take from this. Okay, uninsured and underinsured motorist coverage. This is actually considered liability insurance on your policies. And what you're doing is you are buying yourself protection if you ever get hit by an underinsured motorist or an uninsured motorist. And here's what I mean. So Iowa has very low required liability limits. In fact, to qualify or to get your insurance in Iowa, you only need $20,000 of liability limits per accident. So think about that. You get in an accident, how fast does 20 grand go? I mean, that doesn't even cover most cars, let alone bodily injury. So there's a lot of drivers around driving with 20 grand of liability limits. Okay, a little bit scary. What about somebody that doesn't have it? Same thing. So remember, I call it UM. UM is underinsured. Sorry, UM is uninsured motorist. UIM is underinsured motorist. Okay, so this is coverage that you elect. And I would recommend, is this worth it? Yes, absolutely. Okay. I think we all have a personal responsibility, number one, to carry high liability limits ourselves. So if we are at fault in an accident, there's plenty of money to pay the other party to fix things. Okay, I feel that's a personal responsibility. And next, I'm going to talk about personal umbrella policies. This isn't really a niche, but I get enough questions about it that I wanted to talk about it. Okay. In personal lines insurance, you have your homeowner's coverage and you have your auto coverage. And each one of those coverages has two parts. It has physical damage, right, to either your home or your own auto. And each one of those coverages also has liability insurance. Okay, so think about you have liability at home, you have liability in your auto. And what I mean by home is, let's say someone slips or falls on your sidewalk or your front steps, and you were negligent because you didn't get out and shovel the snow in time. And so they have a broken jaw and they can hold you liable, right? That's at home. Or you're out riding your bike. That's covered, and you get in a bike accident and hurt someone else. That's covered under your liability insurance. Liability is property damage or bodily injury that you cause someone else. That's liability, okay? Same thing on your auto. If you're going through this four-way stop and you don't stop and you T-bone somebody, right? The property damage and the bodily injury that you cause comes from your liability coverage. You cause property damage or bodily injury to someone else. Okay, so each homeowners and auto have both of those going on. An umbrella policy sits above the liability portion on each of those, and it covers both of them. So for instance, if you have $500,000 of homeowners liability and $500,000 of auto liability, and you buy a $1 million umbrella policy, you essentially, that $1 million sits on top of both of those liability coverages. So you, in total, have $1.5 million of home or homeowners liability and $1.5 million of auto liability. Okay. Now, why? I can tell you. Now, here's the little trick. Some carriers will allow that to apply to your UIM also, what I just talked about. So I got 4 kids. We got 6 people in our family, and I get T-boned in an intersection, and it's really bad. Oh, man. You know how fast those bills stack up. If there's, it really bad. So I want huge levels of insurance for me. And also, what I like about it, some people say that your umbrella limit or your liability limit should equal your net worth, right? So think about that when you're thinking about how much you need. Here's why I like it, and here's why I have a big umbrella. Because I want my insurance company to be very, very invested and interested in defending me, and at the same time defending themselves in a court if we need to. So if I, let's say, have a $3 million umbrella and I have $500,000 underlying, I know the company has $3.5 million on the line in insuring me. Now I'm paying for it, but I really like that the company has $3.5 million on the line for me. So they're going to defend me vigorously if it's something that I didn't do or I wasn't at fault, right? So, and plus, I told you earlier, I think it's a responsibility of mine driving in public to have high liability limits. If I really cause damage to someone else, I want them paid for it fairly, right? Okay, so that's my piece on UIM. Worth it? Definitely. And umbrella, worth it? Yes. And ask for UIM coverage on it too. Okay. Question. Okay, rents. The question was, does the homeowner's policy cover if you're renting? Oh, you have renter's insurance. Yeah, same thing, but for renters. There is a liability. So if someone's in your place and gets burned by a pot of boiling water, you have liability coverage under a renter's policy. Well, right. So it would be the property owner's responsibility then. Yep. But renter's policy does have those two things, yeah. Liability and usually personal property coverage, which is your stuff. Okay, let's keep going. We're getting down to consumer insurance here. Pet insurance. You know, there's actually, I don't have pets, so I'm not tempted by this, but there's accident and illness coverage. There's wellness coverage, and then there's exotic pet coverage. Dogs generally cost $50 to $100 a month. Cats generally cost $25 to $35 a month. It goes up as pets get older. Again, I think great opportunity to use your cash cushion if there's a big issue. Down below it says a single emergency visit can exceed $3,000. Yeah, I'm just not willing to pay essentially health insurance for a pet. Okay, so that's my take. Now, is it worth it? It might be worth it to you. I know people really love their animals, but not worth it to me. Okay, identity theft insurance. And by the way, this does not, people are mistaken, this does not prevent your identity from being stolen. No matter what they say. LifeLock, identity lock, we lock, you know, sorry, your identity can still be stolen even if you're signed up for these things. So don't believe what they have to say. And what these things actually do is they're actually a service after your identity is stolen. If you get wind of this, that there's some bad actors around using your information, then you employ these people if you're subscribed to the service when your identity gets stolen, that they will help you work through document replacement, fraud resolution, okay? They will do some of it on your behalf, but again, this does not prevent it. This only helps on the aftermath. Worth it? I don't think so, because I don't have a big fear of my identity being stolen. Maybe I'm wrong in that, but I'm pretty optimistic. So, okay. Travel insurance. This is an interesting one. Boy, this really depends. Why? Because how big of a trip is it? How, you know, are you willing to pay? I mean, we're talking 4 to 10% of trip costs to insure it. You know, for me, I'm pretty confident I'm taking that trip come heck or high water. So I probably wouldn't insure it. But if you have a great big trip where you got 60 people going and you're footing the bill, you might think about it a little bit. Okay. Question. Oh yeah. That's a slide I'm coming up on. Yeah. Now I don't know what I don't know because I don't go cruising is, do they have trip insurance that they'll sell you? The cruise. That's right, credit cards. So some of these coverages are actually available to you elsewhere. And I have a few examples coming up. Okay, cell phone coverage plan. I can just tell you right now, not worth it. I don't think it's worth it. I mean, new devices are $1,000 to $1,200, and you can usually get them fixed in the meantime. So I would say not worth it here. Wedding and event insurance. So there's venue cancellation, there's vendor failure, weather postponement. The average wedding now costs $30,000. So they offer this. My advice would be to have a good backup plan if you have weather or you have a vendor failure. I would say it really depends on this. But, I mean, the cost, it's not much. So might be thinking about it. Computer and device protection plans. I generally don't like these. The cost of these devices have come down so much over the years. I remember when my brother, my brother's 10 years older than I am. When he was 17, he bought an Apple IIe back in 1984, I think. And that thing was like $2,800 in 1984 dollars. That was a ton of money. I mean, today you can buy a decent laptop for $600 or $800. So I think, again, probably not worth this ongoing subscription unless you actually get IT service with it, right? That might be worth it. And again, these sort of things are depending on retailer plans. If you go to Best Buy or if you do Walmart, right, there's some pretty easy plans to get involved in there. Okay, prepaid funeral plans. This kind of takes the form of insurance, a little bit not, but I think, yes, it can relieve financial burden at the time of your passing. And it also removes decisions from the family. So I would say the bigger thing is, do you want the say in how your funeral goes and how your remains are handled and things like that? If so, this might be a good idea for you. If you want to get your plot of land and get it all ironed out beforehand, okay? I know some people like it and some people avoid this like the plague, right? Makes them nervous as all get out to think about this stuff, so. Okay, now we're going to move on to health insurance. How am I doing on time? All right, let's keep moving. Health insurance stuff, I would say generally health insurance. All right, supplemental health insurance. This is Aflac. Everybody knows what Aflac is, right? Okay, this is what they're talking about when they say Aflac. It is if you get sick, if you have an accident, if you go into the hospital or have an illness, and it's all defined in the policy about what those mean, you get cash payments. And you can use those cash payments for anything. You can use them to cover bills, you can use them to buy food, you can use them to pay your deductible, pay your medical expenses. It's additional money when one of these things happen, okay? Way back when, there was, actually with Aflac, back when my wife and I were having babies, and having little kids, is you could sign up for one and it was a 6-month waiting period to cover pregnancy. So as long as you signed up in months 1 through 3 of pregnancy, you could get a, I don't know, $12,000 or $15,000 payment due to pregnancy. And so people were doing it in droves. And they finally got smart and said, actually, that was stupid of us. We need to make it like a 10-month waiting period for pregnancy. But the point is that this can be good for people. But kind of what I go back to, my Compass spoiler was, a cash cushion replaces all this, right? You don't need, if you got a good cash cushion, you have the money to cover the food and the bills and the deductible. Okay, sometimes I call this deductible insurance too. All right. Did I turn it off? No? Can you advance it for me, Caleb? There you go. Cancer insurance, right? 1 in 2 men, 1 in 3 women diagnosed with cancer in their lifetimes. You would think that would make my answer be yes, but I would say, guess what else covers cancer? Your health insurance. Okay, so I would say Yeah, it sounds good, but I'm not a big fan of that. Here we go. Overseas travel and healthcare emergency insurance. Okay. Medical evacuation costs, 50,000 to 200,000. Many U.S. health plans, including Medicare, provide no coverage. I would say return of, if you pass away overseas. I've actually, my family's been a part of that, and it took to get a body back from Europe. So this, again, I'm a huge fan of this because the chances of this actually happening, but you need to check with your health insurance company to see if they would handle these things, especially if you're going to be there for a long time or you go often. Okay, so this is very, very specific. I threw this in there, health sharing ministries. This is not actually insurance. This is, have everybody heard of this for healthcare? Health sharing ministries. These are all Christian-based ministries that say we will share in each other's medical expenses. And there is often, so members pay a monthly share into a community pool. That's essentially your premiums. And when a member has a qualifying medical need, funds from that pool cover those costs typically. They're not forced to. It's not a sure thing that they will pay. And there's quote unquote no premiums, but you are paying a monthly share. This is not insurance, and it's not an insurance company. It's members sharing the risk. Remember when I talked about law of large numbers? One of the issues is they do not cover pre-existing conditions, mental health, substance abuse, preventive care, certain pregnancy expenses, and they often are faith-based programs requiring a statement of faith. Hey, we believe in this. This is what we believe. So just something interesting. I have heard a few people that have been on this. Some of them have had great experiences. Some of them have had poor experiences. Okay, just another alternative. Okay, let's slip down to life insurance quick. Let me catch you up here. All right, life insurance through work. I love this because, life insurance through work. I love this because it's very, very inexpensive. There's no underwriting if you elect it right away. That means they're not going to ask you how much you weigh, if your parents have passed away from heart disease or you have any history or anything like that. You just get on. It's great. It's very cheap. Often goes by multiple of salary, 1 time, 2 times, 3 times your annual salary. However, it's temporary. It only lasts as long as you work there. And if you leave, sometimes you can convert that to a permanent policy. The problem is that the premium usually goes up by a factor of 10. Okay, so the cost goes way, way up. Okay, so I love life insurance through work. AD&D, accidental death and dismemberment, life insurance called. I don't like this because I'm not going to put my risk management plan, right? What's the risk here is if I pass away. My family's counting on life insurance money if I pass away for any reason, not accidentally or, right? So I can't count on this to pay out when my family really needs it. Therefore, I don't view this as very helpful insurance. Accidental death and dismemberment, not worth it. Life insurance for kids. I'm not a big fan of life insurance for kids, but here's some of the reasons why people do it. Because they lock in low premiums for their kids. They guarantee insurability at some point in the future should they get a disease and be uninsurable for their own insurance. There is some growth if you continue to pay the premiums over time. There's some cash value that accumulates in these. Yeah, that is really don't like it. There are more efficient ways to save, to transfer assets to kids than these sorts of policies. Okay. Mortgage protection life insurance. This sometimes is required by a mortgage provider that says, hey, we know over time, for most people 30 years, where your principal balance is going to go down. And we want you to insure that. So if you pass away during the time that you have a mortgage, we get the proceeds and your house is paid off. Okay? I don't like it. I don't like it because you're getting your death benefit is declining over time and you're continuing to pay the same amount. That's why I don't like it. Okay? This is better done with term life insurance outside of the whole dropping death benefit over time. All right, business insurance. We're getting towards the end. Cyber liability insurance, big deal. The average cost of a data breach globally in 2024 is almost $5 million. Cost is going up, including notices of data breaches that have to go out to customers, computer forensic services, actually people, IT specialists diving in and finding out what actually happened, and then offering credit monitoring services to your clients. You know, we've all gotten the letters, right? All of us have gotten the letters, probably 2 or 3 a year. Okay, it's actually becoming required for most businesses to own this. Okay, host liquor liability insurance. Liquor liability, I think we all understand that if we have people over to our house and they drink too much and then they go on and injure somebody in a car accident, we may be liable for serving, okay, or serving them too much. I think we all kind of understand that basic premise. Just like Compass, we are not in the business of selling alcohol. However, occasionally we do provide alcohol to our guests. Okay, so if someone goes out and has an accident after drinking too much here, then we could potentially be liable. Now, but there's also, there is events. You can say, hey, we're having a wedding, and it's much more likely at a wedding that people are going to drink more. And so there is some extra event insurance that you can contact your insurance agent about. But generally, you are covered by serving people, you know, either in your home or in your business, as long as your business is not in the business of selling liquor. Okay, that would be called dram shop. Okay, so bars, golf courses, they have dram shop liability insurance. Everybody else has host liquor liability insurance. Okay. Okay, last one, last couple, kidnap and ransom insurance. These are just kind of interesting ones. Corporate executives traveling abroad, humanitarian workers, journalists, high net worth families. It can happen. And by the way, look at when policies are kept strictly confidential, because telling someone you have a policy voids the coverage. Isn't that interesting? Okay. Horse actually in an agricultural state, Iowa ranks for hog and cattle production. And there are rarely ways to insure production animals against disease on a large scale. That's why we have some of the problems we have in our state. So this is largely for horses. Last one, hole-in-one indemnity insurance. So if a group puts on if we put on a golf outing, which I don't know, Justin may do someday, and we wanted to offer a free Willis car for a hole-in-one on the par 3, we might go out and buy a hole-in-one insurance policy, because we don't really, if somebody gets a hole-in-one, we don't really want to buy him a car, but that's what the insurance does. So there's usually, in those cases, somebody has to be out on the golf course from the insurance company and verify they're actually hole-in-one. So, okay. Whew. That was a lot. Questions on all that stuff. I tried to get into the kind of weird little things. All right. Do we have a mic here? Is this gonna work?
I was wondering what your feeling is about long-term care insurance. The facility I'm most familiar with in Des Moines, it's over $10,000 a month to pay for that.
I love long-term care insurance. The problem is the best policies were sold 25 years ago. Yeah, if you got one. If you got one, hang on to it with all that you have. The problem is, way back when, 25 years ago, all the companies that were writing long-term care insurance didn't realize or factor in the inflation costs of healthcare. They didn't realize how expensive it was going to be to care for somebody per month in a facility. And so they priced them too cheap, way too cheap. Okay. Now, what's going on is insurers have fully realized, number one, the number of insurers that you could actually get a long-term care policy in, I can tell you on one hand. Okay. Secondly, they've limited lifetime benefits, severely restricted lifetime benefits. And thirdly, they have really cranked up the premium. Steve, do you have something to say about that?
Yeah, one other thing that they failed to do, besides not anticipating the rate at which healthcare costs would increase over time, is they screwed up in their assumptions about how many of these policies would be allowed to lapse by the people who purchased them. They were so far off on that, and that ended up being what really killed their ability to write these policies as robustly as they used to. I used to joke with people in the industry, say they wouldn't have gotten that wrong if they just sent an underwriter out, or not an underwriter, an actuary out to witness how these policies are sold. Because in my career, I've sold different types of insurance, but I can tell you that long-term care insurance is the only product where you can get the client to acknowledge readily that, yes, we need this. Number two, you can get them to readily acknowledge, yes, I can afford it. But you can't get but 1 out of 10 of those people who agree that they need it and can afford it to actually buy it. And there's denial in that. Oh, that's never going to happen to me. Or I have better things to do with my money. If they'd ever witnessed, the sales presentation, they would have realized, oh, the people who actually do buy this, they're never going to let this lapse. The only people who lapse these policies are the ones who are forced to through these premium increases that have gotten so drastic that they end up being priced out of their benefits. They can't afford it anymore.
There is one thing that I have seen. Instead of long-term care, I would call it short-term long-term care. So, in long-term care policies, those policies don't cover the first X number of days, right? Maybe 180 days, so 6 months, or maybe 365 days. So there are policies out there, kind of like the Aflac policy, that will cover the first 180, maybe year, maybe 2 years. So I kind of call it short-term, long-term care. Same coverages that long-term care offers, right? In-home coverage for the activities of daily living. That's how the benefits are triggered. But it pays for the first part, for the first couple of years. Whereas long-term care pays for the long-term part of that. So that is something kind of interesting that I've seen out there. We are really close to wrapping up. What time is it? 12:59. Okay. If you have questions, you'd like to talk to somebody about some of these things, ask your insurance agent, ask your financial advisor. I want to wrap up with, we are in the midst of adding new team members because Compass is growing. And we are in our next phase of growth. It's an exciting time. So I want to thank you all deeply from the bottom of my heart for choosing Compass. That means a great deal to us. And also for thinking of us when people in your family or people that you care about have something on their mind. So thank you for your referrals. That's how we grow. That is the primary way we grow. So I want to thank you. Thank you for sending people to Compass. Thank you for coming today. I hope it was good. Everybody that joined us online, thanks for coming. And we'll see you next month. All right.